Hey guys, so we're back for another set of videos talking about the markets. But for this video, I want to focus on and not talk about the Philippine markets first because I know there's a lot of things to talk about. There's a lot of things to unpack in the Philippine markets. There's so many companies that we want to analyze, but there's so much excitement in the US market, especially last night. No, last night Philippine time morning in America, we saw the Nasdaq hit an all-time high. But aside from that, we saw all of the others, a lot of stocks, even the ones that have filed for bankruptcy, go up, and we've seen general markets erase any of those losses from the coronavirus. And that's what we're going to talk about. I want to talk about in this video, why is the US market up? How high has it gone up relative to how low it was last March? Is the threat of the coronavirus gone? And does this mean the US economy is better? And of course, as you all know, we'll look at the technical analysis of the Dow Jones, the S&P 500, and the Nasdaq. So if you want to know more about that, I hope you stay. My name is Marvin Gurmo. I'm a stock market trader and investor, and I trade the Philippine markets, but not just the Philippine markets. I also trade the US markets, and part of that, I share bits and pieces of my principles and my strategies throughout this YouTube channel. So if you're new to this, appreciate it if you could subscribe and smash the bell so you get updated every time I come up with new content about investing and the stock market. And hit the like button also so that more and more Filipinos, more and more stock investors get to see this YouTube video. Now, I want to start with this. The US markets have rallied massively. And here's the thing. No? So we have context. As you all know, even in the Philippines, we saw the markets drop massively from March 19 to where we are right now. And by the time I'm making this video, it's still the US markets have not opened yet for today, but the S&P 500 has gone up 46.4%. The Dow Jones is up around 50%, and please do note, it has hit 27,572 last June 8, 2020. But that's not even the most exciting of it all. The Nasdaq, where most of the tech stocks are, hit an intraday high of 10,002. And it's also up around 50% since March. I even saw Donald Trump post a tweet about it, Nasdaq all-time high. But the US markets have gone up massively. For those who want to know more, by the way, how you can trade US markets, there's two ways. Number one, you can open a bank account, a brokerage account in another country, or you can look at the link below. Also, I have a link for a brokerage firm called eToro. You can click the link and you can open and trade US markets even from the Philippines. But let's continue. So the US markets have rallied. As they've rallied, a lot of people are asking, how is that possible? Why is the US market rallying? There's so much bad news still. Please do not know, up until this time, June 2020, there's still no vaccine for the coronavirus. There's still no cure. A lot of the countries around the world, or a big chunk still, are still in lockdown, or at least are not operating in 100% capacity. In the same way, a lot of the cities and states in the US are not where it was January 2020, the start of the year. We are not where we were before. So that being said, why is it up? Since there's still a lot of issues that need to be resolved and the economy is not in full throttle, why is it up? And just to enumerate some of the bad news in the US economy, number one, 21 million people in the US as of today are still out of work. 30 million US workers are still collecting unemployment benefits. And please do note that every time they claim unemployment benefits, it's a strain on the US Fed for the US government, because they just have to support those people who are claiming unemployment benefits. Then as of today, also, 50% of commercial rent is not paid yet. So what does that mean? That has a ripple effect in a lot of the industries, that people are not paying rent because their businesses are not operating. People are not paying rent because they're not making money. People are not paying rent because they don't have customers. But the thing about that, if people don't pay rent, whoever the owner of the building is also don't have revenue. If they don't have revenue, how will they pay their existing loans? How will they pay their employees? How will they pay all of their other liabilities? So there there is a ripple effect in the economy when people stop paying rent, and it shows you how bad things are because and of course you have to you have to know this. Businesses want to pay their rent because it's part of it, but it's part of their normal operations, it's part of their normal obligations. But we are in a new normal. We are in economy that we have not seen 10, 20, 30, 40, 50 years. No one has seen this. No one has projected this. No one can forecast how this will play out. And while all of this is happening, you have large companies in the US like JCPenney, Hertz, the car rental company file for bankruptcy. So when companies, and please do note now, Hertz filing for bankruptcy, while it was filing for bankruptcy, you saw the stock also go up. And the big risk for companies who are filing for bankruptcy is they have to pay their obligations first. They have to pay their debts first. And if there's a little bit left, that's what they're gonna give shareholders. And it could be a little bit, and it could be nothing at all. But the stock has gone up. Then here's the thing. I mentioned this, that the U.S. government is supporting people who don't have jobs. Since they're supporting people who don't have jobs, they may not have enough cash to support it, and some analysts have been saying that this may end by August, and things may not go well for a lot of people who don't have jobs by then. And please do, I've been saying this over and over, the economy is just made up of transactions. One man's spending is another man's earning. If a lot of people don't have jobs, then you will see spending become lesser. If spending is become lesser, then you see a hit on their domestic consumption. And as you all know, US American citizens spend a lot of money. Now, here's the thing. There will be jobs also that at the end of all of this, it won't go back to normal. Why? Because of social distancing. And when a lot of the other companies, a lot of the other jobs adapt to this new normal, imagine work from home will be a thing. Imagine that if there's a company that pivoted their business and they're not anymore selling, say, pizzas, they're selling something else. Some of the waiters in those pizza factories may not have jobs anymore. Or if they're okay to be lean, meaning before they had 20 employees, but they were able to make do with 15, chances are those 5 jobs won't be there anymore. It won't be available anymore. And you will see that there will be more and more people who will be hit and disrupted by this. Comment below if you're learning. Comment below if this is something that's helping you. Please do note also that we are not exempted. No, whatever happens in the largest economies in the world, if you're a Filipino watching this and you're a Filipino investing in Philippine markets, what happens in US markets, what happens in China, what happens in Europe, what happens in Japan, those large markets will ultimately affect us. Because even for in terms of trade, the Philippines' largest trading partners are China, Japan, and the US. So it's nice to know what happens in the US economy, and it's nice to know what happens in their stock market, because sentiment-wise, it will also overflow to our markets as a whole. And I've seen a lot of projections on this, that the effects of the coronavirus, at least the economic impact, may extend up until 2030. But my opinion, no, of course, those are all forecasts, those are all analysis. No one can really know, because at the end of the day, we are in uncertain times still, and in my opinion, it's still too early to tell. So those are some of the bad news about the US economy, and I've posted a lot of videos about it, especially during the drop last March. But those are a couple of things that those are updates on where we are right now in June 2020. Now, some good news naman. And please do note that the stock market thrives on good news. The stock market, that if there's a sign of something that was so bad and now it's just bad, the fact that from it being so bad to bad becomes a buying signal for some people, or a sign that it may get better. It doesn't mean that it's better, but just the sign that it's better becomes a buying signal also for some people. So some good news is this. May 2020, the US economy gained 2.5 million jobs, as please remember that there were some industries, construction, restaurants started to open somewhere mid-May 2020. That meant that some people who didn't have jobs now had jobs again, meaning as they tried to kickstart the economy, 2.5 million people went back and started to have jobs. And this was the biggest trigger. Unemployment dropped from 14.7% to 13.3%, which caused a frenzy because people are saying, hey, more jobs were added again to the economy. Things are better. But again, we're not yet where they were before in 2019. There were a lot of lost jobs. There are more lost jobs still than the ones that are generated. But truth be told, more businesses opened up already last May 2020. So why is it up? That's one, no. When I said that some stocks that were bankrupt were moving up, a lot of people were just speculating. They're just speculating that, hey, there might be someone else who might buy it higher than me. That's just basically it. So some stocks, and majority of the stocks that have bad fundamentals that were up, it's not the institutions who are buying it. It was basically retailers. Retailers thinking that I don't want to be the last one holding the bag. That they're just buying it with the hope that someone else will buy it from them later on. And in my opinion, that's something that's very, very risky. Trading stocks already has a degree of risk, and using technicals does not excuse you from risk. Using fundamentals does not excuse you from risk. But buying it with the hope that someone will buy it higher from you puts a greater degree of risk in terms of your trades. That's one. And number two is, I believe there's a lot of excess money. There's a lot of excess money in the system. The US Fed has pumped up a large amount of money, a large amount of liquidity that where else would people put it but in the stock market? In terms of quantitative easing, I've read a report that the US will print 3.5 trillion US dollars to pay for US bonds, and that brings more liquidity into the system. And here's another interesting fact. Some people who got their stimulus checks put their stimulus checks in the stock market. Again, it's all about supply and demand. More buyers bring the prices up. If there's a lot of liquidity and it has nowhere else to go, guess where it's going? It's going into the stock market. That being said also, please do note that the Nasdaq is a composition of a lot of tech stocks. And if you analyze everything, those same tech stocks, from Apple to Amazon to Google to Microsoft to Facebook, are all up. And since those stocks are up, and a lot of people have been thinking that a lot of the stocks that I've mentioned are stay-at-home stocks, meaning as Americans stay at home, these stocks will earn more. And those are the stocks that have been pushing the Nasdaq. Those are the stocks that have been pushing the Nasdaq into all-time highs. Apple, guys, Apple, all-time high. And the interesting thing about that is because, this is my opinion, one of the reasons Apple stock is up because a lot of people have been using Apple Pay. This has pushed a lot of people who have been using currency, fiat currency, or using paper money because they don't want the contact because it might spread the coronavirus, have been shifting into digital payments. And Apple is one of the biggest recipients of it. Now, let me show you the charts because, as you all know, everything you need to know is found in the charts. Everything you need to know is found in technical analysis. I want to show you first the Nasdaq. And I want to show you how it has hit also its all-time high. So if you notice it here, this is what people have been saying, though, but this is from a stock market perspective, not from a economic perspective, a V-shaped type of recovery, and that's what's happening for the Nasdaq. This was the large drop from Feb to March, and this is the massive move up over 50+%, where we see a V-shaped type of move up for the Nasdaq. And if you look at it also, all of the moving averages are bullish. The short-term moving averages are showing momentum. Candlesticks are showing buying optimism from a day-to-day perspective. And as what you see here, this was the high last Feb when everything was pushing up in the US markets. This is the high as of June. June is now higher than Feb for the Nasdaq because, as what I said, a lot of the stocks were pretty much connected to tech. A lot of the stay-at-home stocks were pretty much connected to tech, digital currencies, and people not wanting to be infected by the coronavirus. So we're seeing a massive recovery in the Nasdaq. So the current support right now for the Nasdaq, and here's what's interesting. No? The same way I analyze Philippine stocks is the same way I analyze US stocks, because the same way you analyze technical analysis for US stocks is the same way as you analyze Philippine stocks. So the same tools that you have for Philippine trading is the same tools that you can use also for US trading. Current support for the NASDAQ, 9824. If that holds, then we could see, if that holds to be a new support, that could be the new base, and we could see the markets go higher should there be any selling. So please remember this. If there's any selling on the NASDAQ, as long as 9824 will hold, then there's an expectation that this movement up will continue, even though there may be selling that could possibly happen. So that's for NASDAQ. Let's look at the Dow Jones Industrial Index. For the Dow Jones Industrial Index, it's almost the same thing. Large drop from Feb here. Then you have, boom, another large move up, 50+% up. The only difference, though, with the Dow Jones from the NASDAQ is its highest point, its current price, it has not yet exceeded or not yet eclipsed the highest point where it was last February. And it would be interesting to see if we could see the Dow cross past 30,000 this year, in spite of what's going on, in spite of people losing their jobs, and in spite of us not being back in terms of where the economy was in 2019. I want to show you the S&P 500. I hope you guys are learning, and this is something that's helping you. And I want to expose you as Filipino traders and investors. It's nice to be exposed in other markets, because when you get exposed also to what's happening abroad, you get more options in terms of not just diversification, but you get exposure to different brands, companies that that you can diversify from, that will give you a hedge and will give you a different front of growth as compared to what you're seeing in the Philippines. So same, S&P 500 up 46 plus percent. It has massively moved up. It's not also, though, at the level of where the NASDAQ was. NASDAQ hit an all-time high. S&P 500 has rallied, similar to the Dow Jones, but it's not yet where it was as compared to the highs of Feb 2020. So are you guys learning? I hope you are. So what? Just to sum everything up, just to put everything all together, so you could put this to a close. The stock market is not the economy. Please remember, every time the stock market is up, it does not mean the economy is up. The stock market is moving up out of sentiment because people think things are getting better, but it does not mean things are really better. The same way for the Philippines, the past few days, even last week, we saw the Philippine stock market go up. It does not mean that the GDP for the second quarter and the third quarter will be good. It does not mean that corporate earnings for the second quarter and the third quarter will be good. It just means that there's excess liquidity. It just means that people are hoping that things are getting better. That's why they're starting to buy. So I hope you guys got a lot from this. Comment below if you guys have other questions on on everything about the US markets. If you guys have questions on how you can start investing in the US markets, I have the link below on how you can trade the US markets. For those who are asking about my 5 books, I have links below on how you can order them via Shopee. For those who are asking about StockSmart Manila, we are starting StockSmart Manila. We are kickstarting StockSmart Manila under the new GCQ rules. We're starting this June 20 in SMX Manila. Then we have online courses, one with Chinkee Tan called Stock Market for Everyone, for those who want to learn about the basics of the stock market. For those who are saying, ano ba itong sinasabi ni Marvin? Parang hindi ko ito masyado maintindihan. We have a Tagalog course about the basics of the stock market. Link is down below. Then another one, we have Make Money, Grow Money with Sean Si. It's a stock market and entrepreneurship course for those who want to learn the basics of business and investing. They're all in the link below. And then I have other links, NordVPN, Adidas, for those who are asking about what camera gear am I using. It's all there, from the camera, the mics that I'm using. I should put also the lights now. Some of you have been asking what's my vlog setup. So I'll try to put it below as well, and the laptops that I've been using. But a lot of them are in the link below. Even what you guys could use for trading, but they're all in the links. And there, if you guys got a lot of value from this, appreciate it if you could like, subscribe, and smash the bell so you get updated. And share this to your friends. It's time that we have more and more people be excited about investing. It's time that we have more people be excited about learning about money. That masaya mag-TikTok, masaya mag-Netflix, but try to educate yourself also. It's nice to play StarCraft. It's nice to learn a game. It's nice to get entertained. But at the end of the day, you have to hustle and you have to build that skill because it's that skill that will make you money later on. So I hope you guys got a lot from this. I hope this is something that added tremendous value to you. And this is Marvin Germo. Comment below if you stayed up until this end. But I hope this video helps you trade well, trade strong, trade smart. See you all again soon, guys, and God bless you.